Ladies and gentlemen, welcome back to the channel, and really a crazy week on Wall Street. Last week was crazy. This next week is going to be even crazier. We're going to get into exactly what's going to be happening this week and quite possibly the no good outcome. There really is not a good outcome for this upcoming week. If there is, I will be very, very surprised. So will other market participants. They've kind of expressed the same theory and mindset or logic that I am going to with you guys here in this video. So we're going to get into that, kind of a little bit of what happened last week, what's going to be happening this week most importantly. On top of that, I do want to take a deeper look at AMC and talk about some things that you guys need to know. So we're going to get into all of this information. Just wait, hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in that comment section. So, first things first, last week, banking crisis. This is literally the worst banking crisis that you have seen since 2008. It's on a different scale here. This banking crisis is more so centered around essentially bank runs on banks with bonds, because the 60-40 portfolio, where in theory people should invest 60% of their portfolio into stocks, 40% into bonds, 2022 was a bad year for stocks, was one of the worst years on history for the bond market. When people do this bank run, when people want their money out all at once, it's not sitting in the bank. We know this. This is a given fact. It's pretty well-known information. Banks don't keep your money in the bank. They lend it out. They buy treasuries, do all that. Well, when people want their money back instantaneously, they have to go out and start selling some of those bonds. And they're down massively on those bonds. So it really starts to flip things upside down from seemingly sound banks, such as First Republic Bank, that got a $30 billion essentially bailout. I don't really know what you call it. They have $34 billion in cash in the bank, First Republic, and they also got $30 billion of uninsured deposits from basically all of the other large banks. So not really a bailout, but kind of. It's a weird situation. Now, with that being said, the crisis did not stop there. It continued to Credit Suisse, and actually has a lot of AMC investors making a big joke about this. And I think this is funny, and we'll elaborate more on potentially some of the forced loan recalls, forced share recalls, forced loan recalls, whatever you want to call it, in the next video. But Credit Suisse gave AMC a poor valuation last year and essentially compared the valuation to that of a penny stock and said to sell AMC shares. Now it looks like Credit Suisse in Europe, Swiss National Bank bailed out, like a straight bailout of Credit Suisse. It's spreading to Europe. That's not a good thing heading into this week. And specifically, something I want to give you guys first access to, and I think this is very important, is the Fed balance sheet. Now, you may or may not have seen this yet, but the Fed balance sheet actually just went up quite a bit. So if you look at the last 3 months, the Fed balance sheet went from $8.3 trillion. Now it's at $8.6 trillion. So the Fed balance sheet actually went up $270 billion in just really since March 6th was the last reading that we got. So like 11 days ago, the Fed balance sheet went up almost $300 million. Not good, right? Or is that $1 billion, right? $1 billion. That's a lot of money. So you're essentially in quantitative easing mode. Typically, when this has happened in history, you have gotten Fed rate cuts shortly thereafter, and you have went into a recession, again, shortly thereafter. And that's how pretty much this next week is really a lose-lose proposition for the Fed. There's really no good that they can do at this point. Either you raise rates to fight inflation, and the markets are like, whoa, recession, right? Are you oblivious to what's going on in the banks? You just had the second and third biggest bank failures in U.S. history. Like, what's going on, dude? You should not be raising rates right now. At the same time, if they don't raise rates, then there's going to be fears about hyperinflation, and then there's going to be another set of people, which I think everyone could relate to this, Why are you pausing raising rates when you just said 3 weeks ago that you might have to start raising rates 50 basis points again? That does not make too much sense to a lot of people, and that would cause a lot of fear very, very quickly in the markets. And I think that's probably the worst outcome you could have, is if the Fed does not raise rates, believe it or not. The markets want to see a little confidence in the Fed to raise rates 25 basis points. But again, that argument that I just told you, you raise rates, you're literally going into recession. Like, these banks failing, there's no avoiding a recession. You keep raising rates, you're getting us there quicker. If they pause, why are they pausing? Financial system might be a lot weaker than we think. So that's the breakdown for next week. If we actually get into some of the other data points that are going to be coming out on Monday, you really don't have anything. On Tuesday, you don't really have anything as well. Existing home sales month over month, and existing home sales for the month of February alone. On Wednesday, that is when you are going to get the FOMC interest rate decision. And even more important than that, and this is going to be at 2 p.m. So if you're a late sleeper, late bloomer, who knows, who cares, 2 o'clock, you want to be paying attention to the markets. The FOMC economic projections. Now, this is projections from Fed members that basically says where they think the federal funds rate is going to go, where they think it's going to go over the next couple of years. So essentially, how soon do they think they're going to start cutting? And you've seen the Fed members in pretty unanimous agreement this whole time with, we need to raise rates. Some of them have their endpoint, their terminal rate, a little bit different than others, but they've been along the same lines. There's probably going to be a lot of dissent this time around, and there's probably going to be wide ranges of estimates. And if you start to see Fed members expecting rate cuts sooner than that, not going to be necessarily a good thing, because why are they cutting rates? Typically, when the Fed raises rates, markets actually rally. When the Fed cuts rates, that's where you're going into a recession. That's where you're already in a recession, and that's where the markets see some substantial downside from there. So really, there's no good outcome from any of this, guys. Like, I don't want to sugarcoat it for you at all. There's really not a good outcome. Now, in regards to AMC, it does not mean the stock has to come down in a big way, and I'll tell you why. AMC has already fallen a lot over the past couple of weeks now, from the highs of, $8-9 that we were sitting at a couple weeks ago down to where we're currently at right now. I think a lot of bad news has already been priced in, and to be honest, it has been far too negative on AMC. So I don't think that necessarily means that you have to come down. Now, 2:30 p.m., you're going to have the press conference as well, and that is again on Wednesday. On Thursday, you have the initial jobless claims for March 18th. I don't think this is going to be really important at all. I don't really think anything else is going to be important next week compared to the Fed, right? And what the Fed says coming at 2 p.m., and what they say on the summary of economic projections. That's going to be huge for this market, and that is really what is going to drive the market. Now, I'll tell you as well, AMC is primed for a bounce. What you're seeing with the data here, you're going to see a bounce. The question is, when does it happen, and how aggressive is it? Currently sitting at a live short interest of free float at 24.23%, 125 million shares that are currently sold short. Cost to borrow average 335.21%, cost to borrow max 358.94%, and cost to borrow minimum has been very volatile at 7.6% currently. A more, kind of better estimate of where this cost of our minimum might be is around that 160-170% range that Interactive Brokers has us at. Now, I've said this in plenty of videos now, cost to borrow rates should have went down after the March 14th vote. That did not happen. They actually ramped up. So it's going to show you there's going to be a lot of volatility. People are expecting the stock to move a lot. And yeah, after the first couple of days after the vote, people were pretty negative. They were kind of pricing this in short-term speaking, right? They were pricing in this conversion between AMC and APE. Now, as we get closer out, maybe the next week, you're going to see a little bit less certainty around this, and it's going to become more uncertain, and that is what could give you rallies to the upside. Now, I think ultimately after that, okay, just disregard Apple. After April 27th is when you could get some bigger moves with AMC stock. If you take a look at the failure to deliver numbers, those are also very high for next week. 7.3 million FTDs on Monday. On Tuesday, 12 million FTDs. On Wednesday, about 10 million FTDs. On Thursday, almost 11 million FTDs. And on Friday, about 10 million FTDs. So there's going to be a lot of failure to delivers that need to be bought back as well. And I think that could be a stabilization force to really help keep AMC up. It doesn't necessarily have to rip us to the stratosphere, but it will help keep AMC from essentially falling through the floors. Now, if the markets do hit new lows, if you get a 10 or 15% down week this next week, well, I would expect AMC to fall to some degree. To see AMC go to the lows at that point would not be crazy, right? But at the same time, if you're properly hedged out in your portfolios, it should not be a problem to you to see that actually happen. If you're taking advantage of options to play that downside move in the markets, you can actually make a whole lot of money. If you guys want to come trade with me live in real time as well, link down below in the description of this video. We are going to be very busy next week playing trades essentially around the Fed, because you definitely want to have some exposure here if you do have a long-term portfolio like I do as well. So there you have that. As far as the option activity that we seen for yesterday, you had about 721,000 calls expire out of the money. All in all, about 1.2 million puts that were on this expiration. So you did see a lot of that negative, I guess, outflows due to the puts as well. And that definitely did not help out anything, guys. So there is all of that information. That is pretty much going to do it for this video. In the next video, you guys definitely want to watch this. We're going to be talking about the potential for loan recalls heading into next week's volatility, with the Fed meeting, with the odds of a recession, and with the new dot plot and what the Fed has to say. It's really going to shake up the banking industry more than a lot of people want to tell you. And it's gonna get pretty wild. So we're also gonna take a look at the technicals in that next video. So let's wrap it up, guys. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.